Hey everyone, and welcome to The Explainer. Today we're diving into some fantastic source material that basically takes a super dense 75-question accounting exam and magically transforms it into your ultimate strategic blueprint for that next corporate or MNC interview. So, if you're looking to cut through all the noise and figure out exactly what top-tier financial interviewers are hunting for, well, you're definitely in the right place. Let's break down these complex accounting and auditing principles together, shall we?
Let's just dive right in and test your instincts right out of the gate. Imagine you're in the hot seat and an interviewer asks you this. If three retail employees are sharing a single identical cash register during their shift, what is the immediate risk? Take a quick second to really think about it. I mean, it sounds like a simple scheduling thing, right? But it's actually a pretty deep dive into risk management.
Okay, so the answer here isn't just some weird operational quirk. It is a textbook violation of the assignment of responsibility. Think about it. When multiple people share one register, accountability just completely vanishes. If the till comes up short, who's responsible? Nobody knows. And that is a massive, massive red flag for interviewers because it shows a total breakdown in internal controls. It heavily increases the risk of collusion, fraud, and just plain old human error. Spotting that instantly, that proves you've got an auditor's mindset.
To help you navigate tricky little scenarios exactly like that one, our source material is organized into four main sections. Section 1, Financial Reporting Fundamentals. Section 2, Costing and Budgeting Strategies. Section 3, Auditing and Internal Controls. And finally, Section 4, How to Ace Your Next Interview. Let's get to it.
Section 1, Pillar 1, Financial Reporting Fundamentals.
All right, so interviewers absolutely love testing your grasp of timing, so you've got to remember this crucial distinction. Accruals deal with expected future cash receipts and payments. Think of it like recognizing your revenue or expenses before the actual cash has changed hands. Deferrals, on the other hand, handle past cash receipts and payments, so the money is already moved, but the service or product hasn't actually been delivered yet. Grasping this timing difference is literally the foundation of understanding accrual-based accounting.
Now, how does this all build into the bigger picture? Well, you're almost certainly going to be asked how the three main financial statements link together, and here is an awesome insider tip straight from our source's master trainer notes. Net profit is not an isolated thing. It flows directly out of the income statement, goes right into retained earnings on the balance sheet, and then acts as the starting point for the cash flow statement. They're all intimately connected. Explaining that flow smoothly, that's a surefire way to impress.
But beyond just the concepts, you also have to be incredibly fast with your metrics. Let's say an interviewer fires off a scenario where a firm has $1,000 in debt and $3,000 in assets. You shouldn't be reaching for a calculator here. You should instantly know that to find the debt-to-equity ratio, you have to understand the relationship between assets, liabilities, and equity. In this specific case, it calculates out to exactly 0.33. Being quick with these foundational ratios just proves you're super comfortable analyzing a balance sheet on the fly.
Section 2, Pillar 2, Costing and Budgeting Strategies.
A key concept in this pillar is operating leverage, which represents how much the operating income of a company will change in response to a change in sales. But, what does that actually mean in plain English? The master trainer notes clarify this beautifully. A high operating leverage means a firm has a relatively fixed and usually quite high cost base. Think of a massive manufacturing factory, right? Once that factory is built, generating additional sales incrementally drives your profits way, way up, simply because those new sales don't incur much in the way of new costs.
Now, to truly grasp operating leverage, you have to understand cost behaviors within a normal operating volume, which is known as the relevant range. And it's a really fascinating dynamic. Within this range, variable costs per unit actually remain constant. So it always costs, let's say, $2 in plastic to make one toy. But fixed costs per unit, those actually vary based on your production volume. If your factory rent is $10,000, making just one toy means you have a $10,000 fixed cost per unit. But if you make 10,000 toys, well, that fixed cost suddenly drops to just $1 per unit. Knowing this distinction cold is absolutely non-negotiable for budgeting roles.
And this brilliantly illustrates exactly why you need to be prepped for rapid mental math during these interviews. Imagine this scenario. The actual price of a manufactured widget is $10, but the originally budgeted price was $7. The interviewer then asks you for the price variance for a batch of 1,000 widgets. It's pretty simple. Just take that $3 difference, multiply it by the 1,000 widgets, and boom, you get exactly a $3,000 variance. Doing fast, accurate variance analysis shows them you can track performance against a master budget in real time.
Section 3, Pillar 3, Auditing and Internal Controls. So the absolute bedrock of auditing is independence, and it's actually a two-part concept. First, the SEC requires independence in appearance. This means, you can't own stock in the company you're actively auditing, so nobody on the outside suspects a conflict of interest. But honestly, more importantly, you must have independence in fact. This means you are taking a completely unbiased, entirely objective viewpoint in your own mind when you're evaluating the financial reality of the business.
There's a great quote from the master trainer notes here that's incredibly insightful. It says, auditors are focused on gathering and interpreting audit evidence in specific sectors. Both auditors and accountants would be familiar with the principles. People constantly confuse accountants and auditors, right? But as the notes highlight, they both know the accounting principles perfectly well. What truly separates an auditor from an accountant is their highly specific expertise in gathering and interpreting hard audit evidence. Basically, an accountant builds the house, but the auditor inspects the foundation to make sure it's actually solid.
And speaking of evidence, you've got to know the hierarchy of reliability. If an interviewer asks you to evaluate evidence, keep this hierarchy locked in your brain. Oral evidence, so someone just telling you that a machine exists, is considered the absolute weakest type of evidence, period. Documentary evidence is definitely stronger, like getting a confirmation, but the absolute gold standard, especially when you need to verify the actual existence of fixed assets, is a physical examination. You literally have to go out to the warehouse and lay your own two eyes on it.
When you're assessing risk as an auditor, you are constantly on the hunt for red flags. So if you're asked what you'd look out for regarding fraudulent reporting, remember these two major indicators. First up is a cultural red flag. Management openly flouting regulations or just completely dismissing regulatory authorities. That's a huge issue. And second, on the financial side, you'd want to heavily scrutinize any massive, unexplained journal adjustments that are conveniently made right at year end, miraculously allowing the company to hit its profit targets.
Section 4. Ace your next interview. All right, we have just scratched the surface of this material today. We've looked at a few key concepts, sure, but the scenarios tested in top-tier corporate environments are incredibly vast and highly nuanced. So if you want to stop guessing and start knowing, you really need comprehensive practice. If you would like to get into the interview preparation, please enroll for the Comprehensive Accounting Interview Preparation Test, curated set of 75+ multiple-choice questions and answers covering key accounting principles, auditing, costing, budgeting, and financial reporting. It's clearly designed for learners preparing for accounting, finance, and audit interviews across corporate and MNC environments. Visit learning.cosmiclatteindia.in for more details.
I want to leave you with this final provocative thought. The modern corporate finance landscape is incredibly competitive right now. The choice is ultimately yours. Are you going to leave your career trajectory completely up to chance, just hoping you remember these principles? Or will you do the work, prepare thoroughly, and walk into that MNC interview fully knowing you have the competitive edge? Thanks so much for joining me for this explainer. Keep learning, and I'll catch you next time.